Hi guys, welcome back. So right now the market is quite mysterious. The whole world is trying to figure out what's going to happen next. It is quite complicated. A lot of institutions are saying this and that, and they could be completely the opposite. For example, one day we see JP Morgan or Morgan Stanley warning a market correction. On the other hand, we see other institutions suggesting to buy the dip. So I want to share my point of view on where we are going, trying to figure out the bigger picture, and then I would share what I have been doing recently and where I see the next opportunity. So ever since I called out the market bottom on this day, we have had almost 2 weeks of rebound, mainly moving up, even though in the middle we had some bad news here and there. For example, the CPI number being extremely high and also the crash of the Bitcoin, etc. But even though we had up and down, in general we have been heading north on an overall uptrend so far. And what's strange is that even though the market keep going up, on the other hand, we see the fear and greed index remaining in the low of 35, in the fear level. Yesterday, it was even lower than this. Normally, when we see the market going up like this almost every day, we should be seeing the fear and greed index level somewhere in the greed or extreme greed. So if the fear level is at the market's bottom, that would be a great opportunity to buy the dip. Kind of like last year in March, when everyone was fearful and too afraid to buy anything. And yet, if we look at the index of Nasdaq, we are almost near the all-time high. Right now, we are just 3% lower than the all-time high. And for S&P 500, we are just 1% away from the all-time high. And strangely, we are not even at the greed level. This is very weird. So I will share my own personal point of view to try to explain or understand this situation. So I see a few things happening here. Number one, during the whole correction, we have heard a lot of the bad news coming out, like the spike of the bond yield, destroying the valuation of a lot of tech stocks and growth stocks, the rise of inflation, and speculating the rise of the interest rate. All kinds of bad news, one after the other, gave out a lot of the fear for investors, not to mention the chip shortage that kind of destroy a lot of the heated sectors from before, like the EV sector, the new energy, and so on. And since now the index is at all-time high, I think a lot of the smart money would choose to exit and wait on the sideline, keeping some cash, reduce their position. And because of so much negative news sentiment and fear spreading around, it was at some point a euphoria for the short sellers. I think a lot of the retail investors had FOMO into short selling back then. I remember in one video after this day, I said that I see a lot of the short sellers panic buying to cover up their short position and would drive the stocks to go up. And I also analyzed the comparison between the ARK ETF with the Nasdaq and saw that short positioning being open again. If those are retail investors position open, then we should see more short squeeze coming. So that's why we saw that these few days Nasdaq had been running up with less and less volume. Overall, even less than the beginning of April on this run up. On the other hand, if we look at the monthly chart, you can see that we have had a really long time of rally. Right now, all the indexes are at the all-time high after a parabolic move. Even after a few months of correction, it is still quite high, the index. But I also said several times that even though we are at the really high level for the index, but I don't think there would be a market crash, because especially back then, after the new president just recently take the presidency, I don't think the government would let the market to have a crash right away. So that's why even though the market sentiment was really bad, a lot of the small caps were getting destroyed, and yet we see the index can keep climbing up, because that's how they usually do it. Whenever there is danger, like last Wednesday when Bitcoin was crashing, it was a lot of panic, thinking there might be a market crash from here. And I said that when things like this happen, there will be the capital to pull up the index by driving up the mega cap, the FANG stock. And that was what we saw on that day. It's like someone was there to make sure the market does not crash. Well, I guess that's why Warren Buffett always say it's better for retail investors to buy into SPY or QQQ, this kind of ETF, because at least if anything happened, there is the government to ensure the market doesn't crash, to prevent systematic sell-off. At least that's what it looks for now. And that's good for the big institutions, because they can use less money to pull up the mega cap stocks that have heavy weight in the index. So from the outside, the market looks healthy on an uptrend, while they can slowly take profit from their position. Especially after the crash of the growth stock, the smaller cap, a lot lot of retail investors would want to cut loss on their smaller caps and buy into the mega cap. And this, it's just even better for them. It would be a perfect cover for the big institutions, the big capital to take profit after such a big run up we just had, because they have large amount of money. So there are a lot of institutions that have reduced their portfolio size, keeping more cash from before. That's why at every rebound, I have reminded to trim on a good day, so then we can free up some cash to buy the dip again. And if we have cash, then we can take advantage of the super volatile market, because the volatile market like this is good for trading. Grab the dip and sell at rebound, catching some nice profit here and there. So that's what I have been doing recently. And then when our stocks clearly shows the bottom, we can always use the cash to buy the dip and average down on those holdings to be the long-term buy and hold. So that's why I'm holding on to a lot of the Chinese stocks that I think it's quite undervalued and I feel safe to hold. So as you know, right now I'm going quite heavy in Chinese stocks because I'm still quite bullish in the Chinese stocks. But of course, no doubt, if there's a market crash in the US stock market, it would affect everywhere. That's for sure. At least for now it is. So I think right now we're mostly gonna see a lot of moving on the sideways, if not some further correction. Because if you look at the monthly chart, I think the index need to move on the side for a while to digest the previous run up. We can just look at the FANG, for example, like Amazon. Last year it had a really big run up, and ever since it had been going on the sideways for a while. This is why I sold out of my big tech stock last year, because if you look at the past, every time after a big move, the monthly chart would touch the 20 MA, go on the side for a while before the next leg up. It was the same here in 2014 and 2018 here. So after the parabolic move, it would make sense for it to use time to digest the run up, so then it doesn't need to come down or crash the market. So I think the best case scenario, the healthiest situation, is for the index to move on the side for longer to reduce the risk of a market crash. So that's why I said I don't see Nasdaq making an all-time high or another leg up anytime soon. And if it does, that would be quite concerning for me. So that's why I would be more cautious. But being cautious doesn't mean we need to just completely watch on the side and do nothing. We can still take advantage of the volatility of the market while we are keeping cautiousness. I cannot stress it more because I have been saying this for quite a while. Every dip I said it's gonna be breaking out soon. But this time, I think it's a real breakout. Right now, there's still a resistance at 3,620, but it's not a big one. Next target is the previous high, 3,730. And after that, I said the sky is the limit. I have caught out this breakout for a few weeks already, and it finally came. I said I see good news coming, and especially when I saw more and more people saying how they want to stay away from Chinese stock and they should just completely stop all the Chinese stock investment. This is when I thought we are near to see the light of the tunnel, because when they give up, this is when the institutions would keep buying, and when we are near the run up. Different than the US stock index, the breakout actually follow with the increase of volume, so it's looking quite bullish. So I'm definitely holding on tight with my Chinese stocks, especially the undervalued ones. They were probably undervalued because they were under the shadow, because of the political issue, because of the lack of trust. But I think with more and more attention and popularity, the Chinese stocks gain more and more hidden gem would be discovered and then put them back to the reasonable valuation. I have talked about some of the stocks, for example, in my Sunday's video, so you can check it out. And all the problems that people keep fixating on right now about the trust issue, how the Chinese stocks are cheap for a reason, and all those drama, etc., it will go away when people see the share price keep on going up. In the stock market, people have very short memory. When the share price run up, they think it's a great company. When the share price go down, they think it's a scam, it's trash. People's memory on a stock usually don't even last longer than 2 or 3 months for a lot of short-term investors. So once the Chinese stocks keep going up, people are gonna forget about all the hate from before and join the party. Only at that time they're gonna FOMO in. While we have started our position way earlier, maybe a bit early, but being too early, it all always better than being too late. I would much rather be too early than too late, because when you're too late to the party, you never know when your stock had already peaked, has passed the prime time. And if you're caught at the top holding the bag, you would never know whether it's gonna come back or not, and might end up getting lost, much more fear and stress. So I would rather be too early than too late. So ever since this day on Wednesday and Thursday, we have not stopped buying the dip. For example, so far the volume being so small shows that the money who left did not come back yet. So when there is no external amount of money inside the stock market, then it would be basically just the same amount of money rotating between sectors. So that's why we have also been rotating between stocks. And my logic was very simple and consistent. During the whole time, I told you to go to where the fear is. For example, on this day, near the market bottom, it was a lot of media talking about the risk of our ETF crashing. So I bought Open, Butterfly, and Palantir. Open at 13.7, Butterfly at 9.3. So near the lowest of the day. On the day of the crash of Bitcoin, I bought Coinbase. On Monday, when a lot of the Chinese education stocks crashed, I bought TAL at the closing around 35.6, and I sold it yesterday near the closing at 41.8. The news was giving a lot of fear. A lot of people were panic selling. And when the news of the Chinese government saying they would regulate Bitcoin mining activities, if there's one company, one stock that get affected the most, it would be Canaan Inc., ticker symbol CAN, because they are literally the company that sells the miner. So that's why it took the biggest hit, dropping all the way from 39 to the lowest of 7. So I bought the dip yesterday at 7.4, and we had a nice run up today. When we see bad news one after the other, people have been panic selling. Short sellers have had a blast into a point that is just so desperate, and yet it still stay above the support. Then it might be a good time to try to buy the dip. At least the risk reward ratio, it's good because it's near the support. We can always set a stop loss to risk not much for bigger reward. So when the market is full of fear here and there, sometimes it is when we can take advantage of the situation and get the bargain. But also notice that when it's the same amount of money rotating between stocks, then don't be surprised today is this and tomorrow is the other one. And don't cut loss if you see your stocks is not rising yet. So at this point, you can find the bargain and slowly average down on your long-term position. If it has gone up, I don't think you need to FOMO at this point, because there could be more bad news coming that drive some good dip later on too. For example, on my video on Sunday, I recommended the broker stock Tiger because I said when the Chinese stocks market do well, the broker stocks would be an early indicator to show, because investors would believe more and more people would get into the Chinese stock market through these apps. So that's why in these 2 days we have seen a big run up alongside with the rise of the Shanghai index. For the last 2 days it had run up 30%. If you didn't buy in, I don't think you need to FOMO in right now. There could be bad news potentially that drives it down and give you a pullback if you are interested. And if not this one, there could be others. Right now a lot of stocks are at the bottom, so there is no reason to chase, especially when the money is rotating quite fast. So for now, I'm holding on to my long-term position, my Chinese stocks that are quite undervalued. NIO has high valuation, we always know that, because NIO is priced in for perfection, but only because we know it's perfect. But I have done my full analysis before, and I went quite heavy in NIO and made it to my #1 position because I believed there are still a lot of things that a lot of people or even the institutions may not have realized yet, because I saw there are a lot of potential on NIO in the future yet to be discovered, that I have said it in my video before, and we will see it slowly with time. So that's why I always knew it's high valuation, but I was okay to pay the premium for NIO, because really the sky is the limit. Even though it's beaten down so much, we need to be patient with it. Now it has gone up well recently, but we need to watch out for pullback anytime, especially the 60-day moving average is still a resistance. Now EH is the special one. I have emailed them 5 times since early May to ask about the earning, and also I wanted to schedule an interview, but I got zero response. So I really think they really have to improve their investor relationship. Or it's because I'm not a big YouTuber enough, so I got a lot of work to do to grow my channel. So then the companies can take me more seriously. Anyways, I have been watching EH for all this time. Even though it did not run up with the rest of the stocks, it was not falling either. And I think during this time, a lot of retail investors would be frustrated and want to sell out of their position, especially there was zero news from the company about the earning. And when they see a lot of the other stocks were rising with the trend, except this. So I think a lot of people would get frustrated and sell. And when the retail investors sell and the share price doesn't keep dropping, who have been buying the dip, right? So that's why I have been buying the dip as well. And the last time at 22 to 22.5. Last time it had a run up and quickly fell back down with further dropping. I said I almost trimmed some because I set the automatic order to trim at 25.2 and I missed it by 2 cents. Yesterday it did the same thing to have a quick run up and fell back down right away. But I didn't sell anything. I was watching it run up and falling back down because it looked too suspicious to me. I think it looked to me that the institution is trying to do the same thing, to repeat and make people sell. Yesterday my Discord member asked me, what do I think, why EH run up so fast and dip again? I said this might be to make people sell. So that's why I bought more again when it fell back to 22.5. During the whole dropping, I have accumulated a lot of shares for EH already, mainly because the share price just keep dropping, so the value of my holding keeps dropping. And at some point it fell out of my top 3 position. The spot got taken over by Luckin Coffee, so I had to buy more shares. So then EH still remains in my top 3 position, okay? But I hope that it can run up, so then I can trim again to resize my position to make sure my portfolio is balanced, because I cannot let it pass NEO to be the top position. So today it had a great run up because there is the news of launching the test flight for VT30, but this we knew already before. And also I think as of tomorrow, EH would be included in the MSCI China All Shares Small Caps Index, effective from tomorrow after market. This index includes the smaller caps Chinese companies that have good growth of revenue and also good potential. So I guess this has helped investors reassure that EHang is not a scam. At least not their intention. They might make mistake. We still don't know what they have in the earning that's causing the delay, but at least it shows that they're legitimate and they're not a scam. For LKCO, it's hard to judge the valuation right now because I think investors would be strictly looking at their Q1 earning, which they have not released yet. Their 2020 earning was bad, pretty bad, but it's kind of expected already because during my interview, we know that they got hit by the COVID pretty hard and a lot of projects got to be on pause. And things are starting to recover, so we need to see their Q1 earning. But anyways, just their technology should be worth more than their company market cap right now, in my opinion. BIDU cannot have more ridiculous valuation. Even after more than 10% run up from the bottom, the PE ratio is still 9. For a tech company, this is extremely undervalued. Cannot be more reasonable. It cannot be more unreasonable, I think. VIOT and ZEPP had both been growing quite well recently because Xiaomi had always been undervalued, and right now Xiaomi is also heading into a good run. That's why I think VIOT and ZEPP would likely follow too. These 3 companies are kind of a family. I have also opened a position in VIPS and IQ, They are also quite undervalued. Let's see if I have chance to average down more if the market does a pullback. Otherwise, I will keep a small position. WIMI had been quiet for these few days, but I think we need to be a bit more patient with WIMI. It will come. I just bought in before the closing today, after I cut down some other trades that had been growing well. YSG had also shown a bottom and recently had been climbing up. Tuya had basically went parabolic and almost making an all-time high. I sold already. I wouldn't FOMO in right now. At least wait for some pullback to re-enter. Also, I'm keeping an eye on Miniso. Retail and consumer sector is still the trend of this year, and Miniso would be the kind of retail that can benefit from the inflation because it's good design and low affordable price. It was having a good run up, but recently got beaten down because of the COVID in India. Miniso sells very well in India. That's why the revenue would get a hit from the international market. Also, I want to share about the Canadian market. Recently, the Canadian stocks got a lot of hit and did not rise as much with the US, but I think it will come because it got a lot of hit. First of all, because of the tightening of the QE from the government. I think the Canadian government was the first one to announce they're gonna start reducing the bond purchasing. So I think the hit of the growth stock already priced in that, and it might be a good opportunity to buy the dip. And also the second thing is the Canadian dollar might be rising compared to the US dollar. While the US dollar would keep decreasing the value, it would make the Canadian dollar go up. So I think the smart money might want to move some to the Canadian Stock Exchange. So maybe right now it might be a good timing to buy some of the Canadian stocks we talked about before, like Next Innovation, ESE Entertainment, and also Well Health. I recently added this Bitcoin related company, Cloud9. It's an open server to allow a lot of people to share the resources for crypto mining, and also Good Nature. I shared this as well before. Especially after the COVID, the habit of ordering food takeout would likely stay, and it would require massive amount of biodegradable new plastic. So this trend would likely stay after the COVID. So you might want to keep an eye on the Canadian stocks. Okay, that's it for today. Sorry to make this video so long. Now, if you have enjoyed this video, please give me a big like and write me a great comment, and I'll see you in my next video. That's it, guys. Hope you can find my videos helpful. Make sure you subscribe to my channel and give me a big like. Thank you.